So yes, like it was introduced before, my name is Dr. Charles Muyela. I am the Secretary General for the Botswana Doctors Union. I'd like to maybe just give a background to why we're having this engagement, and then I'll allow the team from Botswana Life to just introduce the topic and themselves so that I don't spoil anything. But it was just to give a background and say that Botswana Doctors Union had engaged with Botswana Life because there was a concern to say that quite a lot of our members, or rather doctors, are not taking up a service that is for free. And this service was will drafting. And what was noted also was that quite a lot of us don't actually know what wills are and what they serve, how important they are, and how they can benefit us as doctors, as well as to be aware of what other elements we should be aware of, especially costs that we will incur as a result of having a will, and what other requirements we would need to fulfill as a result of having a will. So the idea was that we'll have an open session where a team from Botswana Life would come and present to the doctors or to our members and explain some of the services they offer, as well as to go in detail on wills and will drafting and what other concerns they should be aware of. And then this would be an opportunity for the doctors to be able to ask questions before we can then go on to a campaign where we're providing the service to the doctor. So without any further ado, I'll hand over the podium to Botswana Life to just introduce the topic, introduce themselves, and then to start the session. Thank you.
Thank you, Dr. Muyela. We won't waste any more time. I'll just hand over to my colleague and boss, Mr. Thabiso Mkile, to just do the short opening remarks, and then we can get straight into it.
Yeah, evening, Dr. Muyela and then colleagues from the Association of Doctors. It's really a pleasure from our side that you've given us this opportunity. As Refilwe said, it's a bit of a late session, so we will get right into it. Really, Botswana Life has an offering through Botswana Life Fiduciary Services. Refilwe Mogwe is the manager of that business, and the qualified lawyer that runs the offering across Botswana Life and the group. So we have been running this for the past 2 years. We have been seeing very good traction, and there's a lot that majority of Botswana don't know about. There's a lot of misconceptions around estate and estate planning and wills drafting and trusts. So these sessions and the ones that will follow after in your one-on-one sessions with the advisors will be really to give that eye opener and ensure that we plan accordingly for our estates, and we ensure that our legacies are planned for, and we understand the implications, the financial implication, the law behind everything, and the risks of not taking this up. So thank you for giving us opportunity. We look forward to this relationship and building on it for the future and for the future of of our doctors planning well. Thank you, Dr. Muyela. Back to Refilwe and the colleagues. Thank you.
Thank you so much, Thabiso, for that. I don't know if Martin, you wanted to or you'll do the closing remarks at the end of the session.
Yes, I'll do that. Thank you.
Okay, let's just get straight into it. Welcome everybody, and thank you for making the time to meet with us as the Botswana Life team and the Botswana Life Judiciary Services team, as well as the Botswana Life Affluent segment. The content of our presentation will be as follows. We'll be talking about the definition of estate planning in a nutshell. We'll delve into wills and then discuss the relationship between life insurance and fiduciary services, because one would wonder, why is Botswana Life and Insurance, a life insurance company, interested in the fiduciary services business? And then we'll also talk about what typical estate expenses one would expect to deal with, and also as well explain what an estate is. And then we can then at the end of it all take feedback and questions. Team, I am not, I don't have sight of my team's menu now, so please help me with admitting our guests as we proceed, and any hands that may come up as we proceed with the presentation. Thank you. Okay. I just want to fix this. I don't like the way it looks. Just give me a second to share and then unshare. Okay. Okay, I was trying to do something, it's not working. Okay, perfect. So what is estate planning? This is where we'll be starting. So estate planning is basically the process one, delves into to basically consider the arrangement of the affairs in the event of death or incapacitation, right? And this deals with how you are going to distribute your estate and how your assets will be handled, who your beneficiaries will be, how your beneficiaries will benefit from your estate, as well as how your liabilities will be taken care of. It also involves sentimental things like whether you wish to be buried or cremated in the event of death. So it is just that process where you make a consideration of what kind of plan you can put in place, such that in the event that there is incapacitation or there is death, then everyone knows what it is that is expected of them. And then within those expectations, people know what to do with your assets, with your wishes, and how to protect your beneficiaries, and including how to protect your assets. So basically, when we are talking about estate planning, we are talking about protection. It means we are protecting your interests. Most of us would have maybe at some point in time inherited something, either from our grandparents or our parents if we've lost them. And then if you're in the process of inheriting something from your loved one, and then there's a need to protect that item. Or if you have something, you're thinking, in the event that I should pass on, who is then going to inherit this particular item, or what are my interests in these things? It also just doesn't speak to assets. It speaks to even protection of your children's affairs. Who is going to be the guardian of your children in the event that you pass on, right? Who is this person? Is this person, fit and proper enough to share the necessary, values with my children, and are they able to provide my children in the event I'm no longer able to provide, either due to death or incapacitation, the same standard that I had been standard of life that I've been trying to give my children. Obviously, we've mentioned that it speaks to assets, and assets are varied. It could be fixed assets, it could be assets such as cash, investments, including your insurance policies, life covers. What happens to these in the event that you pass on? And then the law surrounding all of that you have. What does the law say about children who don't have guardians nominated for them? What does the law say about property that is in Botswana versus South Africa? So all of this is all part of estate planning. Finances. Where are you sitting in the event that you should pass on? Can you afford to pass on currently? Have you made a sufficient financial plan, to ensure that in the event that you pass on, there is sufficient, finances to provide for the children? Is there sufficient money also to ensure that the children are taken care of? Is there sufficient money to ensure that the assets that you have passed on, freely, without any prejudice or without any expenses attached to it, to the intended beneficiaries? Is there also finances to ensure that the property or the assets that you have can be maintained during the winding up of your estate process? Then we have the death. In the event of your death, what then happens? Are people going to be, dilly-dallying and wondering what should happen? If Refilwe has passed on, are people going to be wondering if we should bury her in Gabs or we should bury her in Mahalape? Did she really want to be buried? So we also take our clients through this eventuality. There's also the aspect of heirs. Have you nominated the right heirs? Do you know that if you don't go through estate planning, there is a possibility that certain people may automatically become your heirs without you choosing them to be your heirs? And are you aware of the specific laws connected to estate planning or succession planning? And then executor. Executor is basically, who's this person that you are nominating to wind up your affairs on death? Is this person qualified to do this? Does this person know what to do if you have an estate plan in place, and do they know when to start and when to conclude everything? So basically, estate planning is about a whole host of things. It just doesn't involve the products that we provide at Botswana Life. It speaks to, like we said, your finances, your bank accounts. Where are they? Where do they sit? Who gets to have access to these bank accounts, and who has the authority to transact or close these bank accounts and distribute the monies that sit in there? So it is all about all of that. It's not just about, and this is where we make the differentiation when we are talking estate planning, we make the differentiation between real estate and the estate. So when I pass on, I'll have what is called the estate of the late Refilwe Mogwe. What does that mean? That means that Refilwe used to live. Now, in the event that she passes on, there's this superficial or juristic person created temporarily, who is then supported or represented by an executor. Because for my book of life to be properly closed, there's a whole process that needs to be followed. And this is normally followed whether or not I have an estate plan in place, or my estate is going to be wound up according to customary law. There's always a process that is followed to ensure that whatever it is that was connected to me, be it my children, be it my assets, be it my liabilities, be it any other thing that is connected to Refilwe that needs proper winding up, is wound up. So the best thing is then to ensure that the plan is determinable, it's accessible, and it's clear as to what is then happening. So this is what we deal with. We deal with determinable, accessible, and clear plans as to what happens in the event that Mr. So-and-so passes on, right? And then we also deal with a lot of misconceptions as we move on about estate planning. Normally, when we talk to people, because nobody really wants to, contemplate their own mortality, people always try and shy away from the fact that there is that possibility that I might be, incapacitated until I pass on, or I might die sooner than I had planned. None of us know when they will pass on. So these misconceptions then create a vacuum where people take much longer to put their estate plans in place. So let's just look at a couple of them. So people believe that estate planning will not affect them while they are still alive. This is not correct. Like, we are making reference to incapacitation. It could happen, and as doctors, it could happen that this person is incapacitated. Yes, they're alive, but they can't do basically anything. They can't go to the bank and transact. And such people are susceptible to a lot of abuse. Or if they're not susceptible to abuse, then their estates easily become dilapidated and mismanaged because no one is in charge and no one was appointed. So this person is alive. They can't, act on their own behalf. They need someone to do something on their behalf. But they didn't plan their estates because they believe that it will not affect them while they're alive. And then another thing is, it's strictly for older people. In fact, planning your estate when you're older is more expensive because regardless, it might just be that you need to put in a certain plan in place, and doing it later might be extremely expensive for you. And also, the other thing is that death happens to everyone. It happens to babies, it happens to teenagers, it really happens to everyone. So it's not, set aside for older people. Yes, most people pass on when they're older, but really anyone can pass on at any point in time. And if the reasons for estate planning have been laid out in the previous slide, then estate planning is also relevant to you regardless of your age. And then it's complex and expensive. At Botswana Life Fiduciary Services, we have tried to make it very simple and also less complex and less expensive because we saw the need in the market that our clients, yes, are planning their estates along with our financial advisors, such as Martin and Pomoso in this meeting. But there's this gap where you have all these products, be it from the banks, be it from the investment hubs, from the insurance houses, but then they're not speaking to each other. So this is where now we've tried to simplify it and ensure that it's accessible to everyone, regardless of the complexity of their estate. We still try and simplify it so that it's easier for them to appreciate. And then it's only for the wealthy. It's not only wealthy people, depending on what your definition of wealth is, who need to plan their estates. If you are a young person with young children, perhaps even single or married, you're a young married couple, estate planning is for you. Yes, you're starting off in life, and you still believe that, okay, fine, at some point in time, we will be wealthy, but you have young children. It is important that you make a plan for them. It's important that you consider, if you're to pass on and you're still in your 30s, how is that schooling going to be taken care of? What happens in the event that you pass, both of you as partners pass on, or as a single parent? And then who's going to be in charge of their finances? Who's going to be in charge of the assets that they should have inherited at the time when maybe you wish to have passed on older, and then they're also adults and could manage these assets on their own? So all of that is very important, and it has a lot of financial connotations to it because the children are still going to school. The fact that someone has passed on doesn't stop the fact that school fees is due and payable. And then the other myth is that it requires constant maintenance. That is not correct. You can review your estate plan every 2 years, every year, depending on your personal circumstances. Some of our clients come almost every 6 months because they're aggressive. They are accumulating, real estate aggressively, and therefore they say, "Look, I've made certain plans about what should happen with these assets, but now I haven't made any mention of these two properties that I have since accumulated since we last spoke." So that is another thing that we then consider. And then, so basically that is what estate planning is about. I don't know if we have any questions, or we'll take questions at the end. Do we have any questions? Okay. I'm worried now. Am I audible? Okay.
You are audible.
Thank you so much. All right. So now we're moving on to wills. Let's talk about what wills are. So a will is an estate plan, right? And a will being an estate plan means that you have gone through the whole entire consideration of what should happen in the event that you pass on. Now, how do we access your wishes? How do we access the plan that you have in your mind? And as such, we translate that into a written form called a will. And as such, a will is an estate plan. So when a person says, I have a will, they're actually talking about a plan, a rigorous plan that they went through. Another thing a myth that we've since realized, having done all of these presentations, is that people believe that a will is just a legal document. And therefore, if it covers all the legalities, it is enough. A will is also a financial document. Remember, it articulates what will happen to your finances. It articulates what will happen to your children, whether they'll still continue attending the schools they attend, and as such, where the finances of the funding for such consideration will come from. So as such, there's a need to continuously maintain your will, because your financial positions can change from year to year or decade to decade. So consider that, yes, a will is a legal document, but it is also part of an important financial planning tool. Okay, so what are wills, or what are the benefits of having a will? I'll just briefly define what a will is. A will is a legal document that articulates what the testator, a testator is a male who has a will, a testatrix is a female, what they wish to happen in the event that they pass on. Within a will, they dictate whether they wish to be buried, whether or they wish to be cremated, who is going to be the guardian of their children if they have minor children, where they wish to be, who their executor is, what should happen to their assets. Sometimes it also gets to those sentimental bits where people are like, I want it to be made very clear that Refilwe shall not play any role in inheriting from me. Or we have this family heirloom, which traditionally has been passed down from, the firstborn daughter of every generation. Therefore, I direct that this principle be followed on my death. Why? Because this is a very sentimental thing, and some people are very sentimental about things like that. So if there's nowhere where this thing can be ascertained or established, this can also create big issues in certain families. Then there's a certain way it also needs to be executed. It's not like a lease. You don't sign it and then give your witnesses to sign tomorrow, and then the second witness signs the other day. When you sign it, your witnesses need to be there at the same time. And this is in terms of the Wills Act. So basically, there's a whole way in which a will is, done. There are certain things that it needs to cover. There are certain considerations that we consider when someone does a will. For example, we cannot, if we anticipate there will be some duress, then that will could potentially be invalid, right? If somebody maybe was not in that complete mental faculties, there's a chance that that will may not be valid. So the process of making a will is very sensitive and intricate. It's also very confidential. And we take this aspect very seriously at Botswana Life and Botswana Life Judiciary Services. We store all our wills in a vault, but we'll discuss this as we proceed. So what then are the benefits of having a will? So we'll start with these ones. It prevents what is called intestacy laws from stepping in. We spoke about the fact that estate planning concerns who your heirs are. So I'll just use a simple example. If you pass on and you don't have a will, right? And let's say you are married and you have 2 children. You are married in community of property. The assumption is that because you are married in commutual property, the surviving spouse retains their 50% in that estate. The normal misconception is that the children will at least share on your, as the deceased spouse, that on that 50% that is remaining, right? And that is what, should, well, we wish to happen, but that is not what the law of interstate succession says. It says that your surviving spouse then shares on a child's share, meaning that in the event that you pass on, you are considered to have had 3 children, including your spouse. You can see how unfair that is because your spouse is an adult, and therefore consideration should be made for younger children who perhaps have a longer place to go. Another thing is that even as much as interstate succession law says this, we see that when one spouse passes on, the surviving spouse takes control of the estate. And if it happens that they remarry, they move with this, old estate, if I should call it that, into their new marriage and into their new, marital regime. Sometimes this is what then creates a situation where children are in a position of, I would say, being dispossessed of what should have been theirs. So when you have a will, you're making it very clear that, well, yes, I might be married in commercial property, but this is what at least I would want to happen to my 50%. So intestacy laws operates like that, for example. And then it ensures that minors and seniors are taken care of. It's no secret some of us also take care of our parents, and we also maintain them financially or even provide them with some, shelter. With minors, it goes without saying. So as a result, what then happens to these people? Have you made a consideration? You are a very key person in their life. What then happens in the event that you're no more? So once you go through the will conversation, you are then sure that your minors and your seniors will be taken care of. That is your dependence. Okay? And then it reveals all your assets. We get clients sometimes who I would say they are aggressive accumulators of assets, right? They get some policy, they forget about it. They buy, some tribal land there, they move on, go and work in a different place, and then they sometimes forget that. And even if they don't have a lot, it also helps you appreciate what you really have. So it really reveals all your assets and then makes you appreciate how best to manage these assets while you're still alive and how best they can be managed in the event that you're not there. And then it provides clear instructions for handling liabilities. So there will be those liabilities which are maybe not funded or facilitated through the financial institutions that don't form part of the credit life and the life cover, recovery when somebody passes on. So if you have a loan, say maybe from a Stokvel or Motelo, what should happen in the event that you need to repay this loan? Are these people whom you have, taken money from? Are they now going to be harassing your beneficiaries to be paid? So when you have a will, you then anticipate these things and say, before you even approach my beneficiaries, this is the plan that I've made in place. And then it allows you to donate to charity. Yes, some of us, we are philanthropic. So through a will, you can say, well, 10% of my earnings will go to a church, it'll go to SOS, whatever the case may be. So through your will, you can do that. You can imagine a case where you're that benevolent, but there is nothing that says anything about what should happen to your estate in your passing. And then it reduces chances of family disputes. This one is it reduces. This is the key word. It doesn't eliminate, but it reduces, because most times family disputes are created by the fact that no one knows what to do, when to do it, and how to do it. Everyone thinks that, well, Refilwe has passed on, and in her passing on, this is what she would have wanted. It's a guessing game. So if Refilwe has made it very clear through her estate plan, being the will, that in the event that I pass on, please bury me in Gange instead of Gaffs, then there's no one who's going to say, well, she was living in Gaffs for most of her adult time, alive, so why are you taking her to Gang? that can be very tense, especially during death. So the reduction of family disputes is a guaranteed one there. I'm looking forward to, as we interact, what you think other benefits of having a will are. Okay, so we've defined what estate planning is, how wills are connected to estate planning, and then now we're moving on to the relationship between life insurance and estate planning. Okay, so if you pass on, there is going to be a process where your estate will be administered. And this basically means that there's a process that will be followed to ensure that your gross worth is then measured against your liabilities, and then your net worth is then considered, and then your estate is then distributed according to your wishes, or what is assumed to be your wishes, amongst your beneficiaries or your assumed beneficiaries. So that process that we normally see in our families that is followed, where a loved one has passed on and the estate is getting administered, someone is being sent to the bank with a family resolution letter to close, that is estate, some form of estate administration. But the one that we focus on as an entity is the one where we deal specifically with the Master of the High Court, because there's what we call the Estate Administration Act, and it stipulates what should happen to a person's estate in the event that they pass on. And through that, we do so through a will. So we administer estates through wills that we would have done for our clients. There's also a possibility that some estates will be administered but do not have wills, and still through the Master of the High Court. It takes a longer time to administer such estates. It is more costly. It's costly to the beneficiaries, to the assets, to the executor, and basically to the administrators, being the master themselves. So as a result, estate administration is an essential. All of us, our estates will be distributed. The issue is it's going to be through customary law. It's going to be through common law at the Master of the High Court, through in interstate succession, or is it going to be determinable through your will, and then the master and everyone else knows what role they play? So estate, and then there's also what we have as estate liquidity. So I mentioned that in your estate, we consider who you are and what it is that you owned. And this is where now we talk about estate liquidity. Why are we talking about estate liquidity? Because through the administration of your estate, there are certain expenses that then come in as a result of you having an estate. And it is important that you secure enough liquidity or cash, let me just say cash, to ensure that in the event you pass on, there isn't a shortfall or a gap. Imagine a situation where you've accumulated assets and they're all fixed, but on death, life doesn't stop. So for example, the typical example we like using, children are still going to school. They can't, and then if you think about the way we collect rentals, it takes a longer time for people to pay generally, and also for that type of rental to accumulate and then be enough to provide for school fees. So this is where now you provide. This is why sometimes people have to sell to create liquidity. This is why sometimes they say even lawyers like selling assets in an estate. You may find that it is in most cases due to a lack of liquidity. There are creditors that still need to be paid as a result of you passing on. There are certain expenses that will still need to be taken care of, maintenance expenses that just because you've passed on, it doesn't mean that these things stop accruing. So within estate administration, estate liquidity is essential. And therefore, estate liquidity is essential in or useful in securing the liquidity of an estate. And it provides the estate with a source of capital needed to pay the estate's obligations without the need to sell assets for liquidity. So you have accumulated these assets, you've saved up all this money, but you were doing it for a certain reason. You were building a legacy. You were saying, okay, fine, I'm saving up this 100,000 so that if I should pass on, my children may not need for anything or want for anything, right? And as such, the linkage between what we do as estate planners at Botswana Life Fiduciary Services and our parent company as Botswana Life is that we then marry the two offerings. Remember when we started talking, we said there's been a gap. Our clients are planning their estates, accumulating whatever they're accumulating, but all of this is not coming together. So through engaging your advisor, life insurance then can be used as an asset to the estate, or the estate can be nominated as a beneficiary, such that in the event of death, the estate can access the proceeds of the life insurance. Right now, what we normally do is that when we nominate beneficiaries in our estates, we nominate our loved ones. The risk with that is that you'll be nominating maybe a 5-year-old whose monies will be held maybe by the guardian fund. And then the minute they reach 18, then they inherit all these monies, all these hundreds and thousands of pulas and sometimes millions. That is very detrimental to a young life. So once you've planned your estate, you've gone through the estate planning process, you have your estate plan in place called the will, you then consider how these funds on all these and these life insurance covers should be dealt with. So we are trying to ensure that our clients restructure their life covers if they already have, or if they're considering getting their life or risk products. There is a whole planning process in it that ensures that the estate is protected, the beneficiaries are protected, and the assets are protected, as well as their interests in that estate are protected. So life cover is very crucial to wealth creation and preservation. There are many ways of ensuring how your life cover creates wealth for you. And we will get into these as we hopefully get into one-on-ones from this meeting, right? Okay, so we've spoken about the relationship between estate administration and life cover, that you can structure your policies, or particularly your life cover policy or your estate liquidity cover, in such a way that on death there is a lump sum that will be paid into your estate, such that the executor of your estate has access to those funds. So in such a way that, why then does the executor need to have access to certain funds? Why doesn't the executor just go about doing their job and then close the estate? And this is the next bit of our presentation. It is because there are certain expenses that will arise on death. Remember, death, you can't budget for it, you can't plan for it. You can plan for it, but you need to do it prior to passing on, if I should say something like that. But once it comes, it most times takes all of us by surprise, right? And as such, I should be very careful here because I'm talking to doctors. But anyway, we move on. So once death occurs to anyone, as a result of that death, there are certain expenses that will arise, and some of them are taxes, right? If you haven't paid up your income taxes, the taxman will not forgive you for because you were a nice person and you passed on, and you were a responsible member of society, or you were nice to your family. The taxman becomes a creditor to your estate, and then they expect to be paid. Now, in a case where maybe the taxman says, look, my bill is 50,000 bucks, and yet because of all the expenses surrounding your death, there is no cash, the taxman will still expect to be paid and will look at the other assets that you have, and then maybe tap into the fixed assets, such as the property. So this is where now the gap is created. And this is where now we marry life cover to say, if we restructure, or when we get our life covers, we structure them in a way that there's no need for the taxman to say, look, I get that you don't have the money, but consider this, plot that you have in this travel land plot that you have in Moshopa. Please sell it. It doesn't even have to get that far. You have made a financial plan that then marries to your death. Another typical example is, if then you say, look, I have 2 minor children, and if in the event that I pass on, they are in no position to inherit all of that I've built, therefore we're going to set up a trust for them. This means that now the estate is going to pass to a trust momentarily or temporarily until the children reach a certain age of majority. This could be 21, 23, or whatever age you choose, right? To say that a child who's 18 years is legally considered a major, but realistically still too much of a dependent. So that means that we then need to consider the tax implications of now temporarily placing your assets in a trust for the protection of the children and the assets themselves. So what then does that mean? That you may have to incur transfer duty fees. It means that there might be some capital transfer tax that arises. And where does this come from? This will still be expected to be coming from the estate. So it is very important to ensure that when you go through your estate planning process, you consider this type or typical of expense that goes on, that might arise. Okay, and then legal fees. Legal fees, how do they arise? So another way is that remember we said that a will reduces the possibility of family disputes. But if there's a situation where now somebody is, still challenging the will that you did, right? So this is an answer to a future question that we may have. Does a will ensure that can a will not be, challenged? Yes, people do try. The most important thing is that the will is valid. So, but also to protect the estate from such opportunistic, claims, it is then important at that point in time to have some kind of money. Lawyers are paid on a cash basis, and therefore, if there's no money, they will sue the estate for the legal work that they carried out. Sometimes it's not that it's an issue of protecting the estate from frivolous claims. It could be that someone owes the estate. A lot of us don't go as much as we keep track of who we owe. There are people that we don't keep track of when they owe us. And on death, the fact that you passed on doesn't stop the fact that this person, Refilwe, owes the estate of Mr. Nkile. So, and if Mrs. Nkile knows that Refilwe owes, and she, through her executor, or his executor, they can sue Refilwe. Sometimes it means involving a lawyer to actually, assess your right or assert your right over Nkile's debt, so or credit. So in that case, there's a debtor, and the estate of Mr. Nkile is a creditor to Refilwe. And to get that money, they have to sue me. So that means engaging a lawyer. All right. So expenses that may arise is such things such as legal fees. Sometimes it could be that someone is challenging how you have nominated your guardians or who the guardians should be. That means that becomes even a more complex case where it will have to go to the courts, and the judges will have to assess what is in the best interest of the child. And you need top-notch legal representation to ensure that your interests as a parent are adhered to, or your wishes are adhered to in terms of the will, right? Okay. And then other expenses, funeral expenses. So funeral expenses, it depends on who you are and really what you wish, how you wish your funeral proceedings to be carried out. Some of us have very elaborate wishes. We want to be buried in specific caskets. We want specific, tombstones, and this can be quite expensive. The period of, typically in Botswana, it takes about 7 days to lay someone to rest. And that can be a very expensive, period. And if there are any extra expenses where maybe you had a funeral cover, or if you didn't have a funeral cover, these funeral expenses are attributed to the estate. And as such, people can say, okay, fine, I will contribute and do this. But then they can still come back and say, look, I paid for these flowers and they were about 20,000. And therefore, I need this money refunded. We all know how funeral expenses can create such discourse between family members and friends, because someone was doing something thinking that there is somewhere where people have been collecting all these contributions, and that they will claim from that. Okay. And then medical costs. We all know that sometimes medical aid runs out, and if a client has been hospitalized for a long time, then the doctors will come and claim, or the specialist claims against the estate or the surviving spouse. Why? Because this person, just like a lawyer, is a professional, and their fees for executing their professional obligations need to be paid. And as such, if there isn't enough, liquidity in the deceased estate, then it is important, then it becomes a thing to consider whether you're going to be paying on some kind of a payment plan, or then just to release yourself from the burden of debt so that you can mourn your loved one freely, you then consider selling an asset. So this is how then life insurance, if structured well, and we are here to help you structure your life covers properly, your funeral covers properly, and ensure that there isn't that gap or vacuum that is created by your death. So those are the typical expenses. And then liabilities. I think we've touched on this to say you may have other obligations. There's a bank I know that until recently was issuing home loans without life covers or credit life attached to it. And you'd see that in the event that, the beneficiary of such a home loan passed on, that house has to be sold. It's not because people are being funny, that everyone is just really doing their bit. And as such, if you have a mortgage that is not covered, what then does that mean? That means that the creditor, being the financial institution, will come against your estate and sell. And therefore, they will automatically sell that asset that they have, being the home, and then maybe give you the surplus. And you can imagine what then happens in terms of, in terms of now displacing family and children and so on and so forth. Tuition bills also still need to be paid, such as school fees, such as varsity fees. And this doesn't stop because now you've passed on. And any other, obligations or debts that you may consider which can be attributed to the estate, will become due and payable even on death. And then there's also administration expenses, and some of these are executor fees. So typically, if your estate is, say, worth 20 million, and averagely our executor fees in terms of the Administration of Estates Act, it is a tariff, which is based on the type of asset. But when you multiply it averagely by 2.5, you come to a similar, amount. And as such, if your estate is worth 20 million, your typical executor fees there are at 500K. Now, you would have perhaps even engaged a lawyer to do your will, and who then is going to pay this lawyer? This is why then at the end of the administration, process, creditors such as executors have to then sell. But we have the solution in-house to ensure that this doesn't happen. And this is regardless. We encourage you to take up our estate planning, offering. We really do. But this is regardless of whether or not you have an estate plan with us. It is important that you consider this. Most of us maybe would have already done our wills with lawyers. That is perfectly okay. But your lawyer will still expect to be paid for the duty or the obligation of winding up your estate professionally. There's also advertiser fees. For example, you'll see that in the newspapers, they advertise and say notice of debtors and creditors. And this is the very thing that we're talking about, which speaks to the relationship between life insurance and estate expenses. Because what that advert is actually saying is saying anyone who owes Refilwe or whom Refilwe owed, please come forward and put in your claim or pay us before we come for you or before you come for us. So through that process, that is when now we want to truly appreciate what is the net worth of the late Refilwe Mogwe. And to actually put in this advert in the newspapers is costly. Newspapers are very expensive. You are sitting at minimum of 5,000, and sometimes you have to run these, adverts once or twice. You have to run the net notice of debtors and creditors, as well as the first and final liquidation and distribution account. So all of these fees come from the estate. So when you've planned your estate properly, it ensures that as the deceased, you have enough liquidity to handle all these types of expenses that you will incur on death, including taxes mentioned above. Another typical expense or administrative expense can be levies. I don't know how many of us have gone through the process of buying a property, and then just as you're supposed to conclude, we realize that the seller hasn't been paying that levies for a very long time, and then that delays the whole attainment of the property, because now the seller has to find an odd 30,000 somewhere and create and pay for that. So because when I pass on, this thing was in my name, but when I now have written a will and I say shared between my 2 minor children, because it's moving from my name, what they will do at the council is that they will expect these levies to be paid, and these levies should be paid by my estate. So as such, it is very important to consider. Another typical, administration expense that may come up would be valuation fees. Why? Because we want to appreciate how much this asset was. Of course, my mother said, let's share on this property in Block 9. But she bought it, say, 40 years ago when it was just worth 100,000. But throughout her life, she's made, improvements on it. And as such, now it's worth 2 million. But she's never done any, valuation. So we want to know how much each of us will be getting. So there's going to be, and perhaps maybe her will says sell and distribute the proceeds amongst my 2 children. So as such, we have to value so that we know. And this expense can typically come from the estate. So it depends on who you are, and who you are, I don't mean in terms of status in society. I just mean in terms of what your personal circumstances are, what kind of assets you have, and what your obligations are, and what your dreams and aspirations are. And as such, in such a way, then we can then determine what your typical expenses are, and then we project and say, look, do you have life cover? Yes, and then let's restructure it to ensure that it speaks to your current wishes. If you don't, let's walk the journey together and see that all of these kind of risks are closed. Okay, so we're coming to the end of our presentation. So at the end of it all, what then is it that we do as Botswana Life Fiduciary Services? I should make it clear that BLFS, in short, is a subsidiary wholly owned by Botswana Life Insurance Limited. So BLFS offers estate planning, services strictly. So that means when you come to us as a client, we talk to you about such issues such as the ones that I've been talking about. And we work hand in hand with the affluent segment as well as Komotso and Martin to ensure that our clients' wishes are well taken care of. So at BLFS, this is our offering. We offer free drafting of will, and this is a value add to our existing Botswana Life clients, right? And why do we say it's a value add? Because the process of estate planning itself is an engagement, right? And then at the end of it all, you will have what we call a will. And we only charge, this is why it is virtually for free, 200 pula per annum. And why do we charge 200 pula per annum? We mentioned that the process of estate planning can be very tedious, rigorous, but it is also a very sensitive and confidential process. And we don't take that lightly at Botswana Life Fiduciary Services. So then what we do, we keep these documents in a vault away from all Botswana Life Fiduciary Services and Botswana Life Insurance Limited premises. As such, to really ask the client to meet us halfway for this expense, we only charge 200 pula per annum. But of course, this is with us taking you through the whole estate planning analysis, assessing your estate, and understanding whether is there a way we can help you structure your finances, your risk products in such a way that in your death it really speaks to what you really wanted to achieve. There's also the trust drafting and administration bit. We offer what they call inter vivos trust or living trust. So here now, this is where, as an individual, you want to build generational wealth. You're thinking about not just your children, you're thinking about your great-grandchildren. And then this is a more, it's a longer conversation with our clients, because the reason for setting up a trust should be very clear, because then we need to be talking about the obligations of the trustees. We need to be talking about the mandate of the trust. Who does it fund, under what circumstances, or who does it maintain or support under what circumstances, and what is the end game of it all? Are you just saying you're setting up a trust for your minor children? Then you should be thinking about a testamentary trust. There's the second type of trust that we talk to our clients a lot about, and this one comes up a lot under this process of will drafting. Why? Because there's a need to appreciate what kind of assets you have, how old are your children, where will your assets be parked, for how long, until what age the children can, and at what age can the children have access to these. So this is when now we say, you typically in a testamentary trust say, in the event of my passing, I nominate, I direct that the assets, the proceeds of my estate be transferred into a trust for the benefit of my two minor children. And this trust will terminate when my youngest child reaches the age of 25, because the assumption is that at 25, they are likely to be responsible adults. So this trust only comes up on death, and it is connected to your will. While the living trust or the inter vivos trust is connected, you do it now. That is why it is called a living trust. And you use it as a tool to build generational wealth, whereby you are just planting the seed now as the first generation founder of the trust, and ensuring that in 10, 20, and rather even 100 years from now, that seed that you planted 100 years ago has grown, and every descendant of Refilwe has something that they can benefit, either through education or whatever the case may be, through the trust. Okay. And then administration of estates, we also offer that. When we draft your will for free, we become the executor of your estate. Why? Because we follow a certain specific process in drafting your wills, but we've also recently found the need to open up our doors to our clients to say, yes, you have an existing will, and let's take you through the estate planning analysis. If you still wish to keep your will wherever you are, let's have a look at it. Remember, we said a will is not just a legal document, it's also a financial document. So it helps us consider whether there are any financial gaps, and then whether you need to consider and go back to the professional helping you draft the will and close those gaps. It also helps us make you appreciate of the kind of expenses that you will incur as a result of your passing. So, and then we also charge these executor fees per the Administration of Estates Act. And remember, administration of a deceased estate happens only on death. So this fee or executor fees or these typical expenses will not come before you've passed on. They come only on death. And that is why you need to plan your estate before you've passed on, because planning in reverse is very detrimental to the estate. Okay. I think I'm at the end of my presentation, and we still have some time to take questions. Thank you, ladies and gentlemen. Sorry, Martin, I didn't catch that.
Okay. Thank you so much, Refilwe, for the wonderful presentation that you've given us. I think this would now be the question and answer session that I'll dedicate to our members or whoever is interested in asking the questions. So everyone is welcome to posing the questions. Or Dr. Muyela, is there anything you would like to say before we proceed to the question and answer session?
No, Mr. Martin, I think we can proceed.
Okay. Do we have questions? Or even if you have something that, or any question that you'd like to drop in the chat, you can do so that we answer to it.
Yeah, my doctors are very shy. So yeah.
We'll just give them a bit of time to digest. Yeah. Okay. There's another comment there. Thank you so much for the lovely presentation from Mojela. It's again, Dr. Mojela, it's again. You're welcome, sir. Oh, it's a she. I don't know.
We have another question from, I think it's Dr. Maz. That is, if that's, please come through.
Okay.
Yes, can you hear me?
Yes, you're audible.
Okay, thank you, Refilwe, for such a wonderful presentation. Unfortunately, I just joined towards the end because of some other reasons. But I was very much interested in the portion where you said you can, I think there's testamentary, you said it's testamentary trust or something like that. Where, I mean, you have to decide how much of your estate will go to your different other children or what. I wanted to know more about this investment that you inject into an estate. Suppose it's in monetary terms. Are there any interest that accrue on the amount that you put into your estate? Can you use it as an investment to say, I'm planting in this much, and after some time, I expect maybe an increase in this amount of, I don't know, maybe you can just try to clarify that, so that at least we know whether you can use that as an investment or it is just a saving that you are leaving for your, for your future generation. Thank you.
Okay, thank you, Doctor. So I'll answer this also with the help and support of my teammates. But remember, I just deal with wills and trusts, but I'll wing it and then they'll clarify it. So we have ways of you ensuring that upon your death, your estate has a cash injection, and you can do this through whole of life, whereby you nominate your estate as the beneficiary. Or if you want to now set up a living trust, this is where you're building generational wealth now while you're still alive. You then nominate your trust as a beneficiary to this life cover. So typically people take, average of 1 million upwards for life cover. So what are you saying? If you nominate your trust that you would have set up as a living trust, you're saying that if I pass on, my trust then becomes a beneficiary of a 1 million. And this is how, these intergenerational or generational, wealth is built up in most families that we now see who have risen to prominence. And then you do this through whole of life. And then the investment portion, my colleagues will clarify, but I know that you get return of premiums or something like that. And then you also have the option then of getting the estate liquidity cover. This one goes straight to your estate. The only beneficiary there is your estate. And as such, depending on how your will is structured, the cash injection comes into the estate. And there isn't, I wouldn't say there's, what can I say, an investment element, but they will clarify. But then the beautiful thing about it is that you can't cede it to the bank and say, look, I am getting a mortgage, because you are providing that cash injection, that springboard for the estate, so that all the liabilities and expenses are taken care of in the event that you pass on. So we have ways of ensuring that you use life cover as an investment for the future. But maybe Mr. Nkile or Martin can then talk about what other options we have in terms of ensuring that we tie in estate planning with investments. I hope I've answered you to the best of my ability. And then to the testamentary bit, remember what I said. Testamentary trust is a trust that is connected to your will. So it is simply saying that in the event I pass on, set up a trust for the benefit of my children. So if you have, let's say, a whole of life cover, Puelo whole of life, and then you nominate your estate in your Puelo whole of life as the beneficiary to that estate, the funds are going to trickle to the estate. And then once the estate is wound up, any surplus that comes from your whole of life will then pass to the trust. And the same thing also applies with the estate liquidity cover. All right. Thank you. I don't know if Martin or Homoso, you want to clarify the investment element of it all?
Thank you so much, Refilwe. I guess you've answered him correctly there regarding the cash injection into his or her estate. So I believe that answer is sufficient enough. Well,
yeah, and also please clarify on the return of premiums, because in my lay understanding, that is also some form of investment, or that a client who takes the Puelo whole of life is also benefits from, because after I think it's 15 years, then they get those premiums back. So in a way, they're also saving. So just please kindly clarify that.
yes, absolutely true. So with your whole of life policies or life covers, what happens is on your 15th year policy anniversary, you'll be getting 120% in premiums back of your life premiums that you've been contributing towards your life cover. So this is a return on investment on your life cover. So it will be the cash that you'll be receiving on your 15th year policy anniversary.
Thanks, Martin. I don't know if we have anything else to add, team. Then we can move on to the next question. I hope you answered, Dr. Maz.
Yes, I think it's okay. Thank you very much.
All right.
Okay. Thank you, Dr. Maz. Then we also have a hand here. It's
Dr. Gagobepe.
Gagobepe.
Please come through.
Evening. Thank you for the presentation, Refilwe. I've come to appreciate that being alive and being well rested for eternity is very expensive in either way. I come to gather that from your presentation, just having a will worth of a trust and noting that there should be sums set aside, my head is ringing because it's almost like we are while we are alive, we are working, but in death, everything is sorted out. I've worked hard enough to to make policies, life policies, life covers, and everything else, and noting that a lot of companies are coming forth advertising the assistance of creating a will and also expenses incurred in creating a will. Thereafter now is the execution and administration, of which in this case, having a trust, which I'll have to nominate people and pay and maintain it, also is an expense over and above paying for all creditors and debtors towards my estate at the end. I will truly need, I don't know, some comforting because all I hear are expenses upon expenses. Though I hear of the return of investments of our covers, I need an understanding to say how different is this life cover offered by Botswana Life? Different from the other legal guards, legal wives, even the court clerks themselves. They apparently they offer wills. How different is it outside of at least you keeping it, the will for us for 200 pula? How much truly do we have to pay for it, knowing in confidence that you'll administer it fairly equitably? Then the last part is the assurance of truly how cheap or how affordable is it on any trust to be executed or be established in Botswana. As far as I understand, it's a very expensive enterprise to embark on. Botswana Life is helping us. How is Botswana Life truly making it easier for us while we now are planning to make 5 million pula covers? Is it truly going to benefit us or we are going to incur more? I think I'll stop there. I'm a bit, hey, everything is about a cost now, in death or alive. Thank you.
Thank you, Dr. Kaleboha. Refilwe would you like to clarify that?
Okay. Sorry, Dr. Kaleboha. I'm going to answer this question with the help of my team. It's a very tough one. So what we do as Botswana Life and Botswana Life Judiciary Services is we educate. This is why we have such seminars. We educate. Remember when we started the training or the presentation, we said there are expenses that you will incur or your estate will incur as a result of your death. So some of these expenses are legislated. So, and you can't pick and choose which one to pay for or to provide for because you are trying to save. Now, the strategies of saving are varied. But in our purview at Botswana Life Fiduciary Services, we start with the will. The biggest expense that all estates incur when one person passes on is the lack of planning that comes with not having a will. Because you didn't engage a professional who could have given you, I would say, foresight as to what to plan for. We're not saying people should stop being ambitious, because even if you stop being ambitious and you say, well, I've accumulated this one property, it will still appreciate. So if to the example I made, that my parent bought a property in Block 9 at 100,000, by the time she passes on, it is worth 2 million. What does the law say about transferring this property to beneficiaries? You'll know that there's been some, or maybe some of you are aware, that there have been some developments in terms of the Transfer Duty Act, the Capital Transfer Tax Act. But before, paying for transfer duty was a given. But there is no, guarantee that we will not have what they call an Estate Duty Act, which says if you are Refilwe and your estate is worth 1 million, we are going to be charging you X percentage. These are legislated, endeavors that create an expense. It's like taxing. So remember, the only thing that is certain in life is death and tax. It also used to be rain, but you can still get taxed. So that's why we are highlighting the typical expenses that will arise. Now, where does Botswana Life come in? We are highlighting these expenses because whether or not you have a will, you as an individual becoming an estate on death, your estate may incur this. This is why we even make examples of medical expenses, because we spend a lot of money trying to save the lives of our loved ones. And that then means that the estate depreciates, or the assets that Refilwe own depreciate or get used up because we are trying to save her life, because her life is more important than a piece of land, right? So where then what we do then as Botswana Life, we then provide that safe way of ensuring that if Refilwe had a life cover, and this is where then Boom Martin come in, and then they explain what red disease cover and how your life cover is structured. And then you've been paying, right, say maybe 1,000 pula per month for this type of life cover. Then you know that you've been paying 1,000 pula, so that in the event that you have some dread disease, you then know that you can claim from this cover. And then you then go to the second stage of planning for death. You say, I have 2 minor children, they still need to go to school. You engage your advisor. They say, why don't you consider taking this kind of policy? Why don't you consider taking an estate liquidity cover? Why don't you consider taking a whole of life cover? And then ensuring that you are secure. So I understand why you feel the way you do. We as a team are not surprised, but we are here for you. And do please make sure that you see us at the earliest of your convenience, because remember, we're doing this presentation at a high level, and therefore perhaps in your personal circumstances it's not that dire. So also we want you to appreciate this as a team, that the kind of expenses that Refilwe's estate will incur are different from the type of expenses that Martin will incur. For example, if I am a single mother and I have 2 children, no assets. So we won't be talking about capital transfer tax, transfer duty, valuation fees, because I don't have fixed property. But the only thing that is of interest to me is to ensure that my children go to good schools. But if I pass on and I haven't made proper planning a priority, that whole outlook as to why I stayed away from, investing in land and property will then fall away. And it means that if I pass on prematurely and the children are still at primary school status, what does that mean for them? It means that they won't afford to go to the schools that I was taking them to. What does that mean? It means cash. What is the cheapest way of ensuring you have that cash? It's through life insurance and all risk products that we can offer as a Botswana Life. So it's worth having a conversation. So what then I would incur is different from what Martin would incur, who has 5 houses and 2 children and a wife. And perhaps the wife is a stay-at-home mom who then depends on him, and the children also depend on him. Therefore, the maintenance bill is higher, because now we're talking about 5 other properties and 3 people to maintain. Another thing we need to know is that maintenance doesn't stop just because you've passed on. There's no other way of delivering this kind of news. That's why we really like having such presentations, because then we sensitize our clients and then we can restructure what they have to suit their specific needs or suggest what else they can do. So to answer your very good question, and also I hope my colleagues will help me, what do we do as Botswana Life to ensure that we make estate planning cheaper for you? We encourage that you do it as soon as possible. We encourage that you take whatever recommendations we make seriously. Remember, we said even if you say, look, I'm not going to do my will with Botswana Life, and though you say you're doing it for free, but the financial implication of it all, please consider it and please take it seriously, because like I'm saying, some expenses you can't choose and you won't be there to say, Mr. Taxman, please don't sell. I am going to run around and get a loan from my friend and pay, because you will no longer be there. And a decision will be made for you if you didn't make a plan, or if you made a plan, there's at least something that shows this is what then you wanted us to do. Martin, Mr. Nkila, I don't know if you want to add on to that, particularly on how Botswana Life supports our clients and how we can put them at ease to say that it's not as dire as it sounds. We are here for them.
Okay. Thank you so much, Refilwe, for that clarification. I would like to highlight the fact that, to Dr. Kyaleboga, the fact that we are very wary and aware of the initiatives that you've took as our clients by having those life covers in place and other life insurance policies that you took. So basically, what we are trying to educate our clients on is the fact that as much as you will be having a will in place and also be interested in or having that appetite to establish a trust, we have to also be cognizant of the fact that there are certain costs that arises as a result of winding up your estate upon death. So these are some of the things like your taxes, your outstanding medical bills. We never know how the cost of death may be at the time. Maybe you've been in hospital for quite some time and the outstanding medical bills that needs to be settled. So this burden or this cost goes to the estate. The estate now here would be your dependents or beneficiaries or whoever is remaining behind. So as Botswana Life, we're trying to make or ensure that there's a seamless transition of whatever you've left for your dependents without having them to incur another burden of paying all these other costs associated with the transfer. For instance, when maybe you have only left with beneficiaries or maybe the kids, for instance, so they may be exempted from paying the estate duty taxes, but for them to acquire or register those properties in their names, there needs to be conveyancing fees that need to be paid. So the lawyer has to be in place to ensure that those properties are transferred to them. So by so doing, it's a cost that you'll be incurring or that those kids will be incurring. So we want to have that seamless transition. So hence why I would provide or make provisions for you as a client while you're still alive to ensure that upon death, those costs will be settled without your dependents having to go around looking for cash to settle those. So we do so by ensuring that your covers are in place, and also the beneficiaries somehow, the estate becomes the beneficiaries on one of those policies. For instance, like the estate liquidity cover that ensures that when the payout is made, it's made to the estate. So in that way, we know that the executor will be in control of the account and may be able to pay for all those costs without having to put the burden on to the dependents or your kids.
Thanks, Martin. I think the other element of Dr. Gallagher's question was, how then can we help them ensure that it's cheaper? So we've been largely talking about the will drafting bit of it all. So another way that clients, when you're now looking at long-term estate planning, objectives, and building generational wealth. You then now we talk about living trusts. So these are trusts that you set up while you're still alive. Now, the trick here is that you're going to kill me for this, but still you'll be incurring expenses. Remember, a trust is a separate legal entity. And you mentioned that, yes, it will be managed by someone and you still have to pay. But if it is well structured, the trust then can fund itself and pay for its own expenses. And the reason why you set up such an entity, such a trust, is very important. Like I said, you just don't set it up for the benefit of your children and then you terminate it 20 years down the line. When we are talking about a living trust, then we are talking about something that requires, professional management and so on. But however, the expense of management and setup and everything else can be augmented by the kind of cover you have, right? If you have a life cover that if in the event that you had set up a trust and then as in the process of transferring assets into the trust, and this is the trust conversation is a totally different conversation altogether, right? But we'll just have it for briefly have it for your appreciation. So if in the process of trying to put assets in the trust and then you pass on, but you have this life cover that you've set up 10 years prior, and then you say, look, in the event of my passing, the beneficiary is the trust. So then that cash injection goes into the trust, and that money can be used to pay trustees and to ensure the trust is set up, to cater for taxes, to cater for anything else that might be left out. But remember, take it as simply as things like levies. We don't like paying levies as people, but we have to. We have to pay council rates. We don't, right? And when we don't do that, on death, the estate then has to pay. So if we think about the rates example, about the fact that in your own house, you have to make sure you pay rates. And if you don't pay rates, or you haven't been paying rates for 10 years, that bill is going to, the expectation to clear that bill doesn't just fall off because you are such a great person and everyone loved you. The council authorities will still, acting within the specific act, require your estate to pay. Otherwise, then nothing moves. So we are not discouraging people, we're just sensitizing, and we prefer that you plan ahead, right? And we all know prevention is better than cure. So let's plan ahead so that we don't have to plan in reverse. I hope we've answered you, Dr. Kellovo, but we'd love to have a one-on-one with you when you're available to further unpack.
You have answered. I have two other follow-up questions, but I'll leave my colleagues also a chance for them to ask that question.
Okay, thank you so much, Refilwe. We'll get back to you again, Dr. Galeboha. There's a question here on the chat. It says from Dr. Mogela Itsekeng. It says, if I have more questions on setting up my will and all, how do we proceed? So I believe this was just a holistic approach to having this kind of engagement. So going forward, we'll be having those one-on-one sessions to unpack your needs and see how we can structure your will. How we can draft your will, and also if you have appetite for testamentary trust, then we can have that set up, be set up for you. So I guess we'll be having these kind of engagements on individual basis or one-on-one basis to help you with on that regard, Dr. Itsekeng.
Thank you, Martin. Please share our contact details for our esteemed guests.
Okay, thank you.
You can share on the chat box.
The chat box.
Yeah. And then please share the fiduciary services email also, and our emails and our cell phones.
Okay, thank you.
Dr. Gallup, I don't know if you want to ask as we wind down your last two questions, or you want to take them offline. Dr. Galabuha, do you want to proceed with your follow-up questions, or you'd want to reach out to us and ask further? KB, please share our details also.
Yes, no.
Come through.
Yes, the system just locked me out. So I wanted to ask if I have other, like you're talking about using Botswana Life policies or whichever policies we have. If I have other estates elsewhere in this will you still consider those if I have, with banks and everything? When we talk, when we come to have a sit down, will you consider any other estate or investments, international or locally, in this setup?
We will do so because it forms
Okay.
part of your estate.
And then the last one was, when you administer all this upon my eternal sleep, how quickly do you administer this? Because sometimes we hear that you can be administering this, you are asking a lot of questions. If I have 10 kids and what if you, then expenses to my family and everyone takes long. How long is the turnaround time to executing my will for the beneficiaries to lay everything at rest?
So, first thing is, if an estate doesn't have a will, it will take anything from 12 months to 24 months or even more, because there's no control over the kind of disputes that we'll have. There's no indication of or direction as to what the deceased wanted to happen, so it becomes a whole fight. However, if you have a will, then you expect that estate to take about 6 months. The caveat is that if the estate is still not liquid, it means that the executor takes a longer time assessing how best to ensure that you as the beneficiaries are protected without necessarily selling the assets. The selling of the assets becomes the last resort in most cases for any executor. So that is what then delays the process. Now, I know the real question you're asking is that during this 6 months process, let's assume that the estate is everything's intact, and then the estate liquidity covers and life covers are intact. Why should my family wait for 6 months without receiving any support from my estate? Your executor actually has the obligation to communicate with the master and tell the master that, Master, Dr. Galabuha's estate is structured in such a manner. In terms of his family, he was contributing 60%, and therefore his wife or his children cannot make it for these 6 months. Is it possible for us to make monthly payouts from his account or his estate proceeds to the beneficiaries for maintenance? And then the master approves these monthly transactions, because the executor has to account for each and every disposal that they make in their estate. As such, then we ensure that while we are going about the administrative process, the beneficiaries are not left out in the cold. So a lot of people don't know that even when the lawyers are busy, or when the executor is busy, or the accountants are busy winding up, that you as a dependent are entitled to some kind of maintenance, and you only need to present it to executor, and they need it approved by the master so that those funds are provided. But all of this is dependent on whether you as the deceased was making, had made the right plan. So that is that is how then I would expand my answer to you. But we are free. We don't want to keep anyone longer. You can contact us at the emails, the numbers, and then we are free to have further engagements with yourself. But I hope we've answered you.
Yes, thank you very much. My chat is not. There's something wrong with my chat, so I think Dr. Miela will share details. I'll ask very much.
Okay, thank you, Dr. Kalibuha. Is there any other participant who would like to pose a question? Okay, at this particular point in time, I would hand over to Dr. Muyela to say his last word before I could proceed and give a vote of thanks. Dr. Muyela, are you with us? Dr. Muyela?
He may have had to attend to an emergency. I think we can proceed and close, Martin.
Okay. All right. Thank you, Refilwe, for the lovely presentation once again. So I would first of all would like to thank Botswana Doctors Union for having given us the reception to establish this kind of collaboration in order to extend our services to their esteemed members. So it's a great honor and privilege to say we're very much excited and looking forward to really helping our esteemed doctors have those drafts and wills. Have those wills drafted and also those kind of trust set up. So we are very much excited for and looking forward to that kind of platform that you will be giving us. So in absence of, okay, I hear I'm not audible enough there. Sorry about that. I don't know what could be the problem. Am I audible enough there that side? Oh,
yeah, you're audible.
Am I audible?
Yes, you're audible.
Okay. All right. No, thank you. Okay. I was saying I'll be giving a vote of thanks briefly. So first of all, I would like to thank our special partners, Botswana Doctors Union, who have wholeheartedly welcomed this idea of a partnership, which will further extend to the esteemed doctors. And we strongly believe that this partnership will benefit them so much in preserving their hard-earned assets and also whatever they've accumulated thus far. So I would also like to thank our esteemed guests and invitees who found it fit to grace this call, notwithstanding their busy schedules and other commitments that they do have in their line of work. So I'd like to say your presence is highly valued and appreciated. And we will see each other in person, I guess, soon to have those kind of engagements. So thank you so much to everyone who graced this call. We look forward to engaging further. Thank you, Refilwe.
Thank you for everyone for showing up, and have a lovely rest of evening.
All right. I guess that's the end of our call. Thank you, everyone. So we may exit.
Thank you.
Oh, you're back, Dr. Miela.
Yeah, sorry. I'm back, sir. Okay. I had issues with my network. Sorry about that.
Okay.
But thank you on behalf of everyone. Thank you so much. I guess we'll engage. We'll engage soon.
Okay, no, thank you, sir.
Okay.
Yeah.
All right. Bye-bye.
All right.
Thank you. Bye.
Bye-bye.
Bye, everyone.
Bye, everyone.
Bye.
Maybe